Hello everyone, my name is Aditya Anil. I am the third year BCom student of Marian College Kuttikanam. As part of our subject Financial Management, I have a group activity. We are the group of 6 members. Our activity is to present one financial management concept and make the public aware about this financial management concept. So let's look into our group members. These are the members of our group, and our group members decided one financial management concept to present. So we choose these topics to present, that is angel investors, venture capital and crowdfunding. So angel investors, venture capital and crowdfunding, as you all know that these are the methods to raise fund in our public, for the companies to run their business, to raise capital, to carry out their operations, etc. So these all are the fundraising methods. So let's look into the angel investors. What is the meaning of angel investors? As we have already discussed that this is one of the method to raise fund. So angel investors refers to an investment model wherein business angels, essentially high net worth individuals, provide financial backing for small business in exchange for equity in the company. Angel financing can be one-time investment or it can refer to ongoing support. So angel investors. Angel investors is the fundraising method as well as investment model. When the perspective of the company, it is the fundraising method for the company. But from the perspective of the angel investors, it is the investing model because they are getting equity shares in return and they are getting dividend. So it is one of the investment model from the perspective of the angel investors. All in not only in the case of angel investors, in case of crowdfunding, venture capital and angel investors, these are investment model from the perspective of these investors, but from the perspective of the company, it is the fundraising method. So angel investing is a investment model where the company can raise their fund through the angel investing method. So angel investors, who is the angel investors? They can be called as business angels, especially they are high net worth individuals and they have better business connections and they have a long-term experience in the business field. They are providing the fund to the business for carry out their activities, for setting business, for forming the capital, etc. And the companies are providing equity shares in return to the angel investors. So it is one of the better methods for the companies to raise fund, and angel investors, it is the one of the better methods to invest their money into the safest place. So angel investors is a buying and giving. They are providing the fund, they are getting the equity shares. So they are performing the role of business angels. These are individuals and they will be high net worth. That is one of the speciality. So for more understanding, we can take one example, Ratan Tata. As we all know that Ratan Tata is a successful businessman and he is high net worth individuals, and he is a founder of the Tata Group. So he is a business angel. He is providing, so he is satisfying one criteria of high net worth individual, and he is providing the long support and fund to the business for starting their business or any other activities, whether it is small or large business, that is not a matter, but in small business it will be very helpful, and they are using these methods. So the Ratan Tata is providing fund and he is playing the role of business angels. So angel investors is one of the investment model from the perspective of the angel investors. They can invest their money, and as well as from the perspective of the company, this one of the method of raising the fund. So next, the type of angel investors. There are some types. First one is entrepreneurs. Entrepreneur angel means entrepreneurs are playing the role of angel investors. One is corporate angel. Corporate angel means the corporate are playing the role of angel investor. Then regional. What is regional? Regional means some regional groups or some regional places. Some groups are some individuals are playing the role of angel investors. So next is enthusiast. That is one interesting, because enthusiastic means some people are very curious and enthusiastic to know more about this concept and investment model, etc. So they will be not a high net individuals there, but they are doing the playing the role of angel investors and making profit and returns. So these are the main type of angel investors. So let's look into the advantages. These are some advantages. Obviously, this will be one of the easiest method, and it is connection. What do you mean by connection? Connection. We already took one example, that is Ratan Tata. Ratan Tata, when we can go with that example. So Ratan Tata, let's imagine that Ratan Tata is a high net individual. He is very successful businessman with a lot of experience, with a lot of support, connection, etc. So his connection will be obviously benefit for the company, because he is making fun and he is getting return, so he has some interest on the company. So his connections can be used in this business for their activity and for prospering in their business. So the connection, it will provide connection. Then expert investors, they will be expert. Ratan Tata is obviously, we can know that it is expert investors. So the presence of expert investors is very necessary. Then is extended support, because when they have a connection and they are expertise, it will naturally give extended support to the business. Next is beneficial for new startup. Let's take the example of new startup, ABC Limited. Okay, ABC Limited is a new startup. They are struggling to make to raise money, so they choose angel investors. It is very helpful to raise money rather than listing in IPO, equity share, stock market, IPO, etc. It will take some time. So it will be very beneficial for the new startup to raise money and to take out their operation and forming capital, and for the new startup, one of the another problem the new startup is facing rather than money is that to make a position in the competitive world, because all are competitive and there are so many struggles in front of them. So the angel investors connections, expertise and support will be beneficial for them. Then mentorship. What is the role of mentorship, mentor in our life? Mentor is always providing the advices and providing some corrections for us. So such there the mentorship will be very helpful for the businesses to success and to face problems and to overcome the losses condition, etc. Then non-repayment. What is the method of their transferring? One is equity share is giving, but the company is no need to repay the amount invested by the angel investor. They have to provide equity shares, so there is no non-repayment. So these are the main advantages of angel investors.
Now let's discuss about what all are the disadvantages of angel investors. First one is high return. Angel investors typically seek higher return due to high risk associated with investing in early stage startups. Second one is a variable expertise. Angel investors possess variable expertise uh, due to variable because most of the angels are comes from various industries like tech, finance, healthcare. And the third one is ownership. Angel investors typically seek ownership in the companies where they are investing in, usually in the form of equity. And the last point is request board when they are become interested in business. And next, let's we see a real life case study related to angel investors. In this case study, the company is Ovayo Rooms, founder Ridesh Agarwal, founded in 2013. The industry is hospitality. The background of the case is Ovayo Rooms, one of India's largest hospitality chains, began as a small venture aimed at providing affordable and standardized lodging options. Ridesh Agarwal, the founder, started the company at the age of 19. In this case, let's we see what is the role of angel investors. In 2013, OYO received its first angel funding from Venture Nursery and Lightspeed Venture Partners. Early angel investors played a critical role in helping the company scale quickly by providing seed capital, mentorship, and industry connections. The impact of this real life example is the initial angel investment helped the uh, Ovayo to expand its network of hotels across in India, and also it enabled the company to develop its technological platforms and standardized hotel services, which became a key to Ovayo's rapid economic growth. And angel investors not only provide the financial banking, but also they gave the strategic guidance on how to scale their business sustainably. And these all are the things provided by angel investors help the OYO to get a rapid growth at a shorter time. The outcome of this real life example is by 2021, Ovio had expanded globally and they operating in over 18 countries. And the early stage funding from angel investors was crucial in setting the stage for later rounds of venture capital and eventually Ovio rapid global expansion. This case shows how angel investors in India can catalyze the growth of startups by providing the growth of startups by offering more than just capital. They provide strategy support for early stage ventures. In this section, we discuss about what all are the disadvantages of angel investors and also a real life example related to angel investors. Thank you.
Venture capital. Venture capital is a form of private equity and a type of financing for startup companies and small business with long-term growth potential. Venture capital generally comes from investors, investment banks, and financial institutions. Venture capital can also be provided as a technical or managerial expertise. So the advantages of venture capital are access to funding, business expertise, long-term support, reduced risk, and marketing publicity. The disadvantages of venture capital are delusion of control, pressure to succeed, time consuming, high cost, and limited options.
Okay, now we'll be seeing a real life example of a venture capital journey. We have taken the case of Flipkart. Flipkart got its initial seed funding in 2009 of $1 million from Accel Partners. This helped it to expand its product offerings and invest in logistics and technology infrastructure. The Series A and B funding took place in the years 2010 to 11, where Flipkart got the additional funding from Tiger Global Management. These funding allowed it to scale its operations further. The subsequent rounds of funding took place in the years 2013 to 15, where Flipkart went through multiple rounds of funding, attracting investors such as Naspers, SoftBank, and DST Global. By 2014, the company was valued at $1 billion, making it one of India's first unicorns. In 2018, Walmart acquired Flipkart for $16 billion. This acquisition marked one of the largest exits for venture capitalists in India, delivering significant returns to the investors. So from the journey of Flipkart, we can see how early stage venture capital funding can fuel the growth of a startup into a market leader. It also highlights growing interest of global investors in Indian startups, helping them scale rapidly. Next, we'll be covering the topic crowdfunding. So what exactly is crowdfunding? Crowdfunding is a way to raise money from a large group of people, typically through online platforms, to support a specific project or event such as a seminar or a public cause or something like that. We have seen that when natural disasters like tsunami or drought or landslides affect an area, people often use crowdfunding to accumulate funds to help the people. Participants can contribute small amounts which collectively fund the seminar's costs like venues, speakers, and materials in the case of a seminar, and if it is in case of a natural disaster, then the collected fund from the various participants will be used to help the people. Now, this can also be used by businesses to raise their fund for their project. So it is most commonly used by startup companies or growing businesses. Now there are various types of crowdfunding. The first one is reward-based crowdfunding. It means backers receive non-financial rewards in exchange for their contribution, such as products or services or exclusive experiences. This is common for creative projects, startups, and events. Then we have equity-based crowdfunding, where the investors receive shares or equities in a company in exchange for their investment. This allows them to potentially profit from the company's future success. It is often used by startups seeking capital. Then you have debt-based crowdfunding. It is a peer-to-peer lending where individuals lend money to a business or a person with the expectation of being repaid with the interest over time. This is often used for personal loans or business financing. Then we have donation-based crowdfunding, in which individuals contribute money to a project or a cause without expecting anything in return. This is often used for charitable causes or community projects. So these are the various types of crowdfunding. Now, some of the examples of crowdfunding in businesses are Kickstarter projects, Indiegogo campaigns, equity crowdfunding, GoFundMe for business, etc.
And hi, today my topic is venture capital in funding advantages and disadvantages. So advantages, first one. So first one is access of funding. So access of funding, secure necessary capital for growth and expansion. Then second one, business expenditure. So business expenditure, legally venture capital uh, partners institution knowledge and expands. Then third one is long-term support. So long-term supports is on ongoing for guidance. Then fourth one is reduce the risk. So reduce the risk is shared risk with the ventures capital partners. Then fifth one is marketing and publicity. So marketing and publicity is increased visitors and credible. These are the advantages of venture capital funding. Then disadvantages of venture capital. First one is duration of control. So duration of control, loss of decision making power. Then second one is pressure to success. So pressure to success, highly expectation of repaid growth and returns. Then fourth one is high cost. So high cost is equity shares and protein fees. Then fifth one is limited options. So limited options is residency, flexibility in future funding decision. These are the disadvantages of venture capital funding. So thank you.
So let's go through some case studies. So the first one is Keto crowdfunding for small business. So let's look at the background of this case. Keto is one of the largest crowdfunding platforms which is launched in 2012 by Varun Shetty. Kunal Kapoor and Sahir Adinwala uh, was the founder of this company. So initially, the company focused on social causes, and Keto also played a significant role in helping small businesses and entrepreneurs raising funds for their ventures. So examples for business crowdfunding were uh, the company named Hello Curry, a Hyderabad-based food tech startup, utilized Keto to raise funds for expanding its business. The company wanted to open new kitchen in multiple locations across India and sought financial support from a larger audience. And the objective were to raise a amount of rupees 10 lakh to fuel its expansion, particularly targeting new franchise kitchens and boosting its branch visibility. So the crowdfunding campaign was seen as an alternative to traditional bank loans or venture capital funding, which were harder to access for small businesses. So, about the process, the campaign setup, Halakari created a compelling story on Keto's platform, outlining its business model, mission, and growth potential. They offered rewards to contributors such as discounts and exclusive access to their new kitchen launches. And the marketing done by them was promoting through social media and leveraging Keto's built-in tools to reach out to potential funders. The founders also used personal networks to attract investors. And uh, the reasons which resulted in the success of this company that was the company managed to meet their funding goals within the stipulated time, and they also raised around rupees 10 lakh which was used to set up three new franchise kitchens in small cities. And the impact done by the company was that the campaign, crowdfunding campaign, which was done by Hello Curry, expanded faster than it could have been u- using an traditional funding routes. It also created a community of loyal customers who felt connected to the brand and having contributing to its growth. This boosted brand loyalty and gave Hello Curry the visibility needed for further growth. And concluding this case study, we can see that the case highlights how Indian startup can successfully utilize crowdfunding platforms like Keto to access small scale funding, bypass more conventional financial channels. So, I hope you have understood about the topic, and that's all about the topic. Thank you.